A credit score is a three-digit number that represents your credit worthiness. It tells lenders how likely you are to repay borrowed money responsibly. Think of it as a financial report card. Lenders use it to assess the risk involved in lending to you. Your credit score affects your ability to obtain loans, credit cards, and even apartments. A higher score generally translates to better interest rates and loan terms. This means you'll pay less for borrowing money. Having a good credit score can save you thousands of dollars over your lifetime. It opens doors to financial opportunities that might otherwise be out of reach. Understanding your credit score is crucial for making informed financial decisions and achieving your financial goals. Credit scores typically range from 300 to 850. The higher your score, the better. Scores between 300 and 579 are considered poor. This indicates a higher risk to lenders. Scores from 580 to 669 are considered fair. You may qualify for loans but likely with less favorable terms. Scores in the 670 to 739 range are considered good. This demonstrates responsible credit management. Scores from 740 to 799 are considered very good. You're likely to get the best interest rates and loan offers. Scores between 800 and 850 are considered exceptional. You're a low-risk borrower with excellent credit history. Your credit score is a dynamic number that fluctuates based on your financial behavior. It's important to monitor it regularly and strive for improvement. Credit bureaus, such as Equifax, Experian, and TransUnion, are the keepers of your credit history. They collect information about your borrowing and repayment habits. This information is compiled into credit reports. Credit reports contain details about your credit accounts, payment history, outstanding debt, and public records like bankruptcies. Lenders use this information to assess your credit worthiness. Each credit bureau generates its own credit report, and there may be slight variations between them. It's essential to review all three reports periodically to ensure accuracy and identify any discrepancies. A good credit score is essential for a wide range of financial transactions. Lenders rely heavily on your score to determine your eligibility for loans and credit cards. A higher credit score increases your chances of loan approval and favorable interest rates. This can save you significant money on mortgages, auto loans, and personal loans. Landlords often use credit checks to screen potential tenants. A good credit score demonstrates financial responsibility and increases your likelihood of securing a rental property. Helps improve your credit worthiness.
I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement.
Everything I do so instinctive and so passionate. Every word I move so descriptive like an adjective. I got a vendetta against people who patented being negative when you should be getting after it. I got facts over tracks, this and that. Spitting slow, spitting fast, I could roast, I could gas. Think I'm okay at last, but I don't know if that can erase all the past. And the pettiness, a reflection of the emptiness. Hilarious, you think you're worth my time, you're delirious. Mysterious, because you hide behind a fake exterior. Inferior
Consequences beyond securing loans. Section 7. Credit score myths. Debunked, separating fact from fiction. Numerous myths surround credit scores. It's crucial to separate fact from fiction. Myth: checking your credit score hurts your credit. Fact: checking your own credit score is considered a soft inquiry and does not impact your score. Myth: Closing old credit cards improves your credit score. Fact: closing old cards can actually hurt your score by reducing your available credit and shortening your credit history. Myth: carrying a small balance on your credit card helps your credit score. Fact: it's best to pay your credit card balances in full each month to avoid interest charges and improve your credit utilization. Understanding the truth about credit scores is vital for making informed financial decisions. Checking your credit is important, and you're entitled to a free credit report from each of the three major credit bureaus, Equifax, Experian, and TransUnion, once every 12 months. You can access these reports online at annualcreditreport.com. Reviewing your credit reports regularly is crucial for identifying errors, detecting fraud, and ensuring accuracy. If you happen to find any inaccuracies, you should dispute them with the respective credit bureau. While credit reports provide detailed information about your credit history, they don't actually include your credit score. You can obtain your credit score for free from various sources, including credit card issuers, banks, and online financial platforms. Section 9. Boosting your credit score. Proven strategies for improvement. Improving your credit score takes time and effort. Pay your bills on time. Reduce your credit utilization. Don't apply for too much credit at once. Space out your credit applications. Become an authorized user. Consider a secured credit card. Implement these strategies to improve your credit worthiness. Section 10. Credit score sabotage, common mistakes to avoid. Certain financial behaviors can sabotage your credit score. Avoid these common pitfalls. Maxing out your credit cards. High credit utilization can significantly lower your score. Keep your balances in check. Co-signing loans for others. When you co-sign a loan, you're equally responsible for the debt. If the primary borrower defaults, your credit score will suffer. Ignoring credit card statements. Always review your credit card statements carefully for errors or fraudulent activity. Paying bills late or not at all. Late payments can have a significant negative impact on your credit score. Make it a priority to pay your bills on time. By avoiding these credit score saboteurs, you can protect your credit worthiness and maintain a healthy financial profile. Section 11. Building a credit-healthy future. Habits for long-term success. Maintaining a good credit score is an ongoing process. Cultivate these habits for long-term credit health. Monitor your credit regularly. Check your credit reports and score periodically to stay informed and address any issues promptly. Create a budget and stick to it. Avoid overspending and accumulating debt by tracking your income and expenses. Save for emergencies. Having a financial safety net can prevent you from relying on credit cards during unexpected events. Live within your means. Avoid lifestyle inflation and only spend what you can afford. By adopting these habits, you can establish a solid foundation for long-term financial well-being. Section 12. Resources for credit success. Tools and support for your journey. Numerous resources are available to help you build and manage your credit effectively. Annualcreditreport.com. Access your free credit reports from all three bureaus. myfico.com. Learn more about FICO scores and purchase your credit score. Credit Karma and Credit Sesame. Get free credit scores and personalized recommendations. National Foundation for Credit Counseling, NFCC. Find certified credit counselors who can provide guidance and support. Leverage these resources to gain a deeper understanding of credit, develop a plan for improvement, and achieve your financial goals.